Gold breached $1,300 this week. So, what brought us to this point, and will this last? Please welcome CEO of Euro Pacific Capital, Peter Schiff. Peter, thank you so much for talking with me about this. When one does well, the other doesn't do so well. We're talking about the dollar versus gold. If we look at gold and the U.S. dollar, since November of last year, up and down, it went way down and then it swung right up. It's been the strongest in a while, let's just say. But since the beginning of this year, we've just seen it go straight up. We're seeing a total decline now. Short-term drop-off for the dollar, or is this a problem that's been happening for some time now?
Well, I think the dollar had a substantial rise based on the expectation that the Fed would be able to normalize interest rates and unwind its massive balance sheet, and a general belief that the Fed's experiment had actually succeeded and that the economy was in better shape as a result. And so the dollar kind of rode that rally. And now I think it's starting to surrender those ill-gotten gains. The dollar is on pace for its worst year since 1985. We just finished the month of August, a down month for the dollar. It's been down 6 months in a row. And so the weakness in the dollar is one of the reasons that the price of gold has been rising in dollar terms, but it hasn't risen much in terms of other currencies. But I think that's about to change. I think now that we've really kind of broken out, gold's above $13.20 in dollars, and in fact, gold was strong most of today, even as the dollar began the day firmer. It did end negative, but gold was still up against all currencies. And I do think that that trend is going to continue between now and the end of the year and then accelerate next year.
The argument can be made that political tensions with North Korea pushed gold up, causing it to breach 1,300 this week. What do you think?
Well, gold was going up regardless of the political tensions in North Korea, which seemed to last just one day. In fact, gold was up that evening, but it actually finished down the following morning. So gold has been rising, and it's not because of a safe haven. If people really were concerned, if there were geopolitical fear out there, the stock markets would be falling, but they're not. The stock markets are rising. So people are not buying gold because they need a safe haven, at least not from geopolitical events. I think they're buying gold to get out of the U.S. dollar. They're buying gold to have safety from inflation, which a lot of people haven't understood the risk. But I do think globally the risks are going to start to become more evident as a result of monetary policy that has existed around the world, not just the United States, but in Europe and Japan and China. There's been a lot of money creation. Interest rates have been held artificially low. And I think fiat currencies around the world are going to be losing value. And so people want to get out of them, and some people buy stocks and other people are buying gold. And I think more and more people will be buying gold around the world. And if we ever do get a real geopolitical threat, then I think people will flock into gold as they dump equities. But that's not happening yet.
Well, let's take a little bit of a more in-depth view of the dollar's decline since June. We're talking 97 down to 93 on the dollar index. Now, some are seeing that as a good thing. Mike Swell from Goldman Sachs has said it's actually an attractive prospect, and we should consider a long trade on the dollar. What are your thoughts?
Well, I think going long the dollar would be wrong. I mean, I think that trade has already played out, and I think the real money is going to be made betting against the dollar. But the question of whether or not a dollar going down is a good thing, it depends on your perspective. If you're foreign, if you don't own dollars, if your debt is denominated in dollars, if you buy commodities that are priced in dollars, but your income is in other currencies, then it's a good thing. And I think the weakening dollar will end up being a very positive event for a lot of people around the world, particularly in the emerging markets that have a lot of U.S. dollar-denominated debt, and especially some of the countries that not only have dollar debt, but that export commodities. So they will benefit. But it is a negative for America because a weak dollar means that Americans have less purchasing power. So it means our standard of living goes down because things are more expensive for us to buy. And ultimately, it's going to push up interest rates as the world has to price in dollar weakness into interest rates. And so far, the Fed has been able to keep rates artificially low, but a strong dollar made that much easier for the Fed. Once it's fighting a weakening dollar, the task is going to become increasingly difficult.
Right. So let's talk about those rates. traders in the U.S. They're more interested many times, of course, in knowing about Fed policy. We heard some tepid statements, Jackson Hole last week. We're looking at spending, inflation by the Fed's own index that it looks at, pretty low. Do you think there could be an interest rate hike by December? A lot of people say no. Do we see another rate hike at all? And what could it do to the dollar prices by the end of the year?
Well, I think the dollar is going to go down regardless of what the Fed does. I mean, that trend is in motion. And, you know, the Fed has shown a propensity to raise rates regardless of the economic data ever since Trump was elected president. So I don't really know what they're going to do. Maybe they'll raise rates again before the end of the year. But regardless, I think they're very close to the end of the cycle. I mean, anybody who's smart now is looking beyond the next rate hike to the next rate cut, because that's going to be the beginning of the next easing cycle, which I think is going to take rates back to zero, maybe even below zero. It's going to unleash QE4, which I think will be bigger than the first round, 1, 2, and 3 combined. And so those are going to be more important factors. Also look at the budget deficit that I think is going to be exploding over the next several years, particularly if we go into recession. But if we get tax cuts, and, of course, we're going to have some big government aid package for the victims of the hurricane and the flood in Texas. And, all that money has to be borrowed because we literally have nothing saved for a rainy day. And when we have a day where it pours, we have to go and borrow the money.
Okay, real quick before we go, we got to talk about this debt ceiling. September's a big month for the U.S. government. It hits up on Capitol Hill again. It's not only going to have to talk about raising that debt ceiling, but also to create a spending bill for the next fiscal year. As we move into these talks, do you think we'll see any sort of market reaction, or will this turn into sort of another wait-and-see situation where we won't see any real market reactions until we either raise the debt ceiling or go into a shutdown of some sort?
Yeah, well, I don't think anybody really believes that the debt ceiling is not going to go up. I mean, this is a phony crisis that they manufacture. But, the real crisis is the debt ceiling going up. I mean, I would love to see the debt ceiling stay there, because that would shut down the borrowing and force government to cut its size and spend less money. But, we're going to keep on raising the debt ceiling, and that is the crisis, because it means the debt keeps growing, and so the downward pressure on the dollar is going to keep rising.
Right, you're not alone in that fear, let me tell you. Thank you very much, Peter Schiff, CEO of Euro Pacific Capital.